the private equity industry at the height of the pandemic last year basically froze in terms of deal activity, but you had very publicly said that you're not going to repeat mistakes from the financial crisis. You're going to put money to work. Nearly a year later, where do you stand on that now?
We invested almost $40 billion last year. And, if I look back right now, and hindsight is always a great thing to have, but pricing has clearly moved up since we made these acquisitions, and the market has become a lot more competitive versus when we were active during the sort of, Q2 and Q3 last year. And I don't think we would be able to make those transactions today in the environment we have. So I feel pretty good about what we've invested in.
Does that mean that you're not able to put as much money to work this year as perhaps you did last year during the height of the beginning of the pandemic?
Yeah, I definitely think deployment for us this year is going to be a little bit more challenging, just given the prices and the environment in general.
How worried are you about those valuations?
Look, I mean, I've always been worried about valuations. There's never been a time when we felt that everything was cheap. Even if I look back last year in March, April, we felt we paid some very rich prices. Looking back now, it turned out that that was not the case. But it's very hard. Whenever you make these investments, you feel that you're paying top dollar. So I think we need to be smart about where and how we invest. And we will still be able to deploy some capital, but it is more competitive at this point in the cycle.
That's really interesting because, as you say, it's competitive. So many people are putting a lot of money out there, deploying a lot of capital. I mean, do you think your peers just are basically overpaying at this point then because they are pursuing so many deals?
I mean, I think the deal volume has picked up, but it hasn't picked up that much, actually, if you look at the statistics. Look, I think our competitors need to do what they have to do. They clearly didn't invest as much last year as we did, and so maybe there is a sort of catch-up element to it. But I think for us, if we focus on the right type of transactions, the right themes that we want to pursue, then I do feel there's some opportunities that we can still invest in.
What are those themes you'd be interested in pursuing?
So there's sort of 3 or 4 themes that we've been looking after proactively, and we've actually looked after even prior to the COVID crisis. And I think some of those trends got reinforced through COVID. So healthcare has been a key sector for us that we've been trying to invest in and have invested in. The whole digitalization is something that we've invested in. Both of these trends clearly being reinforced through COVID. And then lastly, and very important for us in Europe, we've been trying to invest behind ESG, sort of environment, social and governance themes much more proactively than we have been doing in the past.
When you're looking through those themes and in this environment where valuations are high, how do you make sure you're getting the companies you want, the deals you want, but not overpaying for them?
Yeah, well, that's tricky. So, I mean, a lot of these businesses we work with for a long time before we make an investment. So let's say there may be some family companies that we look at in Germany, and we may well have been talking to that owner or entrepreneur for 4 or 5 years before he finally decides to go into a transaction. And given we put this work in up front, that then will repay, and we will be able to invest in that company, maybe without even a competitive process. And those are the type of things that we're looking for.
The process you're describing definitely sounds like it's something that requires a lot of boots on the ground. You need to meet with people, you need to see them to get that trust you're talking about. How do you do that in a COVID world where everything is now Zoom meetings and not really face-to-face anymore?
Yeah, that's a very good point. And if you actually look back at some of the transactions that we ended up investing in last year, those were all deals that we had done a lot of work prior to the crisis, basically. So we knew the owners, we knew the management, and we knew them from having met them prior to the crisis. Now we have adapted. We are meeting people over Zoom, but it is more difficult to sort of generate that level of trust over Zoom. So there's still some physical meetings. I traveled for some physical meetings, and some of my colleagues did, where we are seeing owners or entrepreneurs. But we're also using technology. We don't need to physically do factory site visits. We've actually done that using a drone. So there's ways that we can do some of the things that we used to do physically, now digitally. But I do think to develop a trusted relationship, we still really need that sort of in-person encounter.
How much of that carries forward? I mean, that idea of using a drone to visit a factory, that's really fascinating. Is that just something that's going to happen for years to come now, even when the pandemic's behind us?
I think some of those innovations will definitely stay with us. The fact that we have been able to raise capital almost entirely online, I think some of that effect will stay with us. We don't need to go and have physical meetings with some of our investors that we've known for tens of years. So, but I do think once we are past this period, there will be some return of more in-person meetings. I don't think we'll entirely replace it, but if we can go and visit some remote factories with a drone, then we're definitely going to continue to do this.
In terms of getting past this period, when we look at vaccine deployment, it definitely has been behind in Europe versus the UK versus the US as well. How does that change your outlook in the region when we are seeing vaccine deployment falling behind?
Yeah, it's obviously a concern. And I do think there is going to be, compared to what we had expected at the beginning of the year, when we were really looking towards a faster deployment of vaccines and we're looking to really coming out of the crisis in Q2, I think that's probably shifting a little bit. So we're seeing a delay into how quickly we're going to come back there. I do think we will, but it's probably looking more like after the summer than before the summer. And it's going to affect our businesses obviously quite a bit.
Yeah, how much concern do you have about the European economy because of that?
I actually feel reasonably good about where the EU economy is. I just think it's a timing question as to when we're coming out of this period, and it's just taking a little bit longer than what we had originally expected. I think the governments are doing all the right things in terms of providing stimulus, and we'll see that stimulus coming in effect, maybe just a little bit later, a little bit delayed.
Turning to SPACs, because this, of course, is a very hot topic right now, not just in private equity, but it could be sports stars and other financiers as well. What does it tell you about where we are in the market that we have just this huge volume of these types of sort of private equity products coming into the market?
Well, SPACs have been around for a while, right? It's not something new. It's just that their volume in which they're around right now has really picked up a lot. Again, there is a difference between Europe and the US. I think Europe has been a little bit behind, really, because of what some of these exchanges have been able to do, and I think a lot of the exchanges are trying to change those regulations to enable SPACs to come, and certainly Amsterdam has done that. They've been quite flexible, and so we started to see a few listings starting to happen in Europe. Overall, I think with my PE hat on, it's a good thing because it gives us another opportunity to exit assets. It's not such a good thing because we may have some competition for assets from SPACs. So there's sort of two sides to it. I think overall it's good because it provides more liquidity. I think it's different from private equity because it really is a public vehicle. And what we're trying to do is to buy private companies. We're keeping them private. We're trying to improve them. We're trying to add value, and then we're taking them public. Versus this is something that's all done in the public eye. I think it therefore means there's probably less leverage than on something that we would put on in the private sector. So I think there's a difference. I don't really look at it as competition. I look at it as an additional pass for us to liquidity.
Is exit via a SPAC then, is that more attractive to you than an IPO? Is it easier? Is it preferred? How do you weigh the two?
Yeah, it depends really on the business that we have. It can be quicker than an IPO, no question, because the IPO process, preparing a prospectus, going through a filing takes a long time, and with a SPAC, that process can be accelerated. That definitely is an attraction. It provides liquidity. You have the uncertainty because you do need the approval of the SPAC holders, which you really don't know if you have that before. But yeah, it's an attractive option that's sort of been added to our toolkit in terms of exit.
And speaking of being added to the toolkit, KKR in the US, of course, listing a SPAC, looking at that, do you think that it would make sense in terms of a European SPAC as well? Is that something you would look at?
You know, I can't comment on our SPAC, and we're currently in filing with the SEC. And you know, I think overall we will continue to look at the various options across what we're doing in both the US and Europe.